discussion forward and talk about is it time to expect good returns for 2021 or now it's time to moderate down expectations? Are markets ahead of themselves or this market has just about started with this earnings cycle? Mahesh, good morning. Good to have you back. Haven't spoken to you in a while. What is your view on the market, Mahesh? Do you think markets are running ahead of themselves or looking at the bent of the economy, earnings and macro, the price action is justified?
Well, you can say that the market is slightly running ahead of the fundamentals, but if you look at a slightly longer term view, I think we are at a cusp of a beginning of a new economic cycle, right? And if you really factor in that, then I think the market still has got a lot of room for growth to go up. And mind you, even before this COVID crisis, we were actually going through a slowdown in the economy, right, in the last 3 years because of the various challenges which were there. Demonetization, GST, the banking and financial services crisis, and then the COVID crisis. As we are coming out of that phase, and you see the pretty sharp rebound in the economy globally, and mind you, the macro conditions are very good currently at this point in time, with enough liquidity globally, with very low interest rates. On the forex front also, we are very, very comfortable. So even from here, I mean, we just finished our annual outlook for next year. And we see even from here, the market, if somebody has a 2 to 3 year perspective, I think there are decent returns to be made for the market from here because we are getting into a new earnings cycle is what we see, where the earnings growth in the next 3 years will be significantly higher than the long-term average growth what we have seen. And actually, if you look at it, we've seen some upgrade to earnings after the second quarter, and people are underestimating probably the growth in the coming quarters. And I think if you get into the new earnings upgrade cycle, I think in the markets, while it looks expensive at this point in time, it might not look so expensive to start looking forward in the next 1 or 2 years.
Mahesh, I buy your view on economy that earnings cycle has started and things are looking up. But how much of the current scenario which you alluded to, macro is good, interest rates are low, liquidity is strong and earnings cycle has started, is something which markets have not factored in? Because stocks or businesses where we know there is visibility, all of them are up between 50 to 100% from the recent lows.
So you're right on that. So if you really look at the market at this point in time, you will find that most of the stocks are pricing at least the current expectation, okay, what one has. But I think what we are looking into is that, there are a few sectors, okay, especially the quality sectors or sectors which have been doing well earlier, which are already pricing where there would be much upside from here. But what are the cyclical sectors, if you look at, they have been depressed now for quite some time. I mean, not in the last 6 months alone, but even prior to that. And in those sectors, cyclical, I think as domestic economy starts to gain traction, we would expect that these cyclicals could play out to probably outperform going forward. And there is some room for valuations, okay, to really converge to the long-term average. So I think that is the way which could play it out. Also, I think the valuations would remain higher than the long-term average. I think in the environment where there is interest rates are going to remain low for a long period of time, you would see that the multiples for the market would, or even for the sectors, would remain higher than the long-term averages. And that is something which one needs to keep in mind when one is evaluating companies.
Mahesh, within the pharma names, and I also ask because they've been so front and center with news, with the run-up, with all the developments, whether it be to do with the vaccine or even otherwise, and also in terms of targeting out the US market. What has sort of emerged as a key opportunity according to you in the pharma space?
The pharma sector has done phenomenally well. If you look at year-to-date and last 1 is one of the best performing sector. And clearly there has been re-rating of all the pharma names, especially for companies which US export oriented. I think you see where there was a pricing pressure, it is now stabilized. The API space, the pharma API sector has seen a very strong growth in the last 2 quarters. Again, taking advantage from what's happening in China and lot of sourcing happening from Indian companies. So that is another sector which has done well. But I think overall we think now in the pharma sector, largely the valuation re-rating has played out. I think we will see some kind of consolidation. But within that segment also, I think now it's going to be, there are 2 plays which we see. One is the domestic pharma segment, which is likely to grow at a steady pace. There is a focus on healthcare, on health insurance, which will see a secular growth in domestic pharma, especially in the food space. Apart from that, on the US side, I think the companies which have moved up the value chain into specialty chemicals and have a very good strong product pipeline, that will continue to drive US sales going forward. So it will probably be more stocks specific now from here on in the pharma sector, which one have to really choose if you're looking at further outperformance from here.
Okay, so getting extremely specific on that front. We've also seen the entire basket of commodities really rally given what we're seeing in global markets, the recovery all around on prices and feeding into the buying frenzy there. Is that a theme that you're looking at, and within that then would there be certain buckets that you'd be positive on?
Commodities actually have surprised pretty strongly in the last quarter or so. Again, driven by strong demand coming in from China. And China, as you know, again is coming back on the growth path. Last month, the PMI has shown a very strong growth. The GDP growth also is back in positive territory. And I think that is leading to support in demand. While on the supply side, we haven't seen that catch up happening. And as a result, all the commodity prices have moved up, metals, ferrous as well as non-ferrous. And on the back of that, the weakening of the US dollar is also supportive for commodity prices. So I think at least getting into the next couple of quarters, it seems that the commodity prices should remain fairly strong. And that should benefit both the steel companies as well as the non-ferrous names. Again, in India, we've seen that a lot of the players which are integrated should benefit much more, because we've seen input raw material prices like coal as well as iron ore prices have also gone up. So we need to capture the full value chain. The integrated players in the ferrous space should be able to do well. And I would say that at least for the first half of next calendar year, I think we see a strong demand for metal prices.
Mahesh, wanted to get in your view on stocks within the mid and the small cap universe, because you had mentioned that it will be very difficult for a lot of companies to survive this crisis, and if you look at a long-term view, there will be value in some decent quality mid caps as they manage to pivot and really survive and thrive during this pandemic crisis. So have you noticed any companies or anything that you'd like to specifically point out within sectors that have managed to tide over?
So again, specifically on the mid cap and small cap sector, I think we believe that the market is getting much more broad-based now, and the trends have already been seen in the last 3 to 6 months, and I think that will play out. And given that scenario, especially at a time when the economy is likely to come out from this phase and we see growth coming back next year, that's the time when lot of these small cap and mid cap companies tend to do well. There's a strong correlation between the performance of the mid and small cap stocks and the domestic economy. And so given that, if you look at in that sector, I think we've seen some amount of activity back into the industrial space. The government is trying to really scope up manufacturing. We've seen the PLI scheme, which has been introduced, we think is going to be a big game changer for a few sectors, especially in the consumer durable side. That's a sector where there is also a strong domestic demand, and with some amount of import substitution, that's a space which offers good opportunity in terms of growth also, and with often story of increasing penetration. So consumer durables is one sector which will do well. Besides that, industrial also, I think as the capex do well, private capex is still away, but we've seen a large period of slowdown in the private capex for the last 3-4 years. I think the base is very, very supportive, and with a few sectors where investment activity picks up, and with the home PLI scheme, if that takes momentum in the next couple of years, I think there is some value there on the industrial side. So these are some of the sectors on the domestic side which would grow. Also in the cement sector, also if you look at there's a big divergence between the valuations of the large cap and the mid cap space, and cement also has shown strong resilience in this downturn. Volume growth is back now in low single digits. Pricing environment has been stable. So that's another sector where probably the mid and small caps could do well.
Okay, fair enough. And what's the outlook when it comes to the IT sector as well? A defensive play, but basis the kind of news flow that we've seen from a lot of these companies that we heard out from Infosys as well yesterday, talking about their digital focus. Where within IT is it that you're finding comfort, Mahesh?
The IT sector also has seen, if you look at the narrative from the IT sector in recent the top IT companies, as you rightly said, they are talking about a good kind of a deal pipeline, which will get converted in the coming quarters, and to that extent, stepping into the next fiscal year, we are seeing a very good outlook over there for the IT space. And within that, as you rightly said, the whole trend towards digitization and cloud migration, I think that is gaining a lot of momentum post-COVID, and companies which have well positioned in that space and worked towards that in the last few years are going to get a larger market share. So I think most of the top IT companies have worked towards that, and that should benefit them. Also, we've seen a good trend towards offshoring again. In this environment, people have realized that you don't require so many people on site, and you can do a lot of work from home. So again, there is a big drive towards offshoring, and that should benefit the Indian IT companies. So I think clearly the slower growth what we've seen in the IT sector in the last 2-3 years, which was around 7-8%. I think next year we're looking at growth slightly in the low teens, or 10 to 12% in that range, and that bodes well for the overall IT sector. But overall, the sector has seen a big amount of re-rating. So probably to that extent, the performance of the sector might not be at great, but clearly the earnings growth and the top line growth, what we see, I think that's the kind of the returns still the sector can deliver going forward.
In the last couple of months, have you incrementally increased your positions, or have you dramatically changed a few things?
In which IT sector?
No, general, in the portfolios you manage.
So by and large, we've slightly shifted our tilt towards some of the cyclicals. As I mentioned, we expect some of the cyclical, domestic cyclicals could do well getting into the next calendar year. So there's been a slight shift over there. Apart from that, some consolidation, okay, we have done in the banking and financial services sector. Again, that's a sector where we see that the bigger and the larger players will continue to consolidate and gain market share and do well. So there's no point trying to go down before over there. So we've done some amount of consolidation in the banking and financial services sector. But I think what we see is that for the first time we see quite a few sectors where the outlook is looking positive. There are very few sectors actually where the outlook is negative. So to that extent, the portfolio is pretty widely diversified across sectors, which was not the case around a year back when just a few sectors were doing well. That's a big change what we are seeing going forward.
Mahesh, for let's say metals or commodities, do you see that the shelf life for stock prices to go higher now could be limited and restricted? Markets, they move forward, metal prices are moved in, but do you think now we are reaching that place, we are reaching that stage, at least for some of the metal companies, where irrespective of what happens to metal prices, the stock prices may not go higher because the run-up has been extraordinarily strong?
So I think the run-up what we have to see in the stock is not from the recent news, but from a slightly longer term perspective. So given the fact that some of the stocks have run up recently, there could be some consolidation. But at least the outlook at least in the next couple of quarters looks fairly strong. And we've seen price increase recently, but I think it's likely to sustain over there. And the numbers, if you come in for these metal names in this quarter and next quarter would be extremely good. So given that, I would say while the stocks are run up, I think they could still potentially still continue to outperform at least from a near-term perspective. And we've seen that in this market, many companies, where we thought that they have probably reached their target price, but where the outlook and the narrative has been strong, because of the huge amount of liquidity which is there, stocks continue to outperform. And we've seen new kind of valuation benchmarks which have been created. So I think we should just keep that in mind. As I said, if a sector is doing well, if the outlook is good, one should not be in a hurry to sell. But clearly as the stock prices or the stock reach a level, valuations which are in that zone which is slightly above the long-term average, then one needs to be a bit careful, because any shock from there can mean significant amount of correction from those levels. But at the moment, I think we still believe that it's not a time to sell the metal stocks, but should continue to hold and ride this value.
Market started recovering, the leadership was with IT and pharma, and seldom we've seen that in a bull market when the leadership is clearly well defined, the leadership does not change. But of late, IT pharma has slipped into price-wise and time-wise correction. Do you think they will make a comeback, or now it's time to move out of the so-called IT trade and the global trade?
So I think again, very interesting in this last 6-9 months, I would say, we've seen a lot of sector rotation and very fast sector rotation. We haven't seen that earlier. Normally, sector trend plays out for a longer period of time, but the rotation has been very fast. We saw, as I said, IT power did well, then banking and financials took the leadership in the last 2 or 3 months, and then consumer staples have also kind of died down. We've seen some kind of movement in the last few weeks, but I would say that again, IT and pharma also, the numbers in this quarter, right, in the third quarter should again be fairly good. So given that as we move forward, I think after some period of consolidation, this sector should also do well. Obviously, one should not expect a large outperformance there, what we saw earlier, but the sector rotation trade will continue. But if you take a slightly longer term view, then I think the leadership would probably move away from IT and pharma, because for the index to really go higher and scale new highs in the coming years, it should move to some other sectors. And some of the other sectors could be banking and financial, so it could be one sector. Consumer discretionary would be another sector as we come out of this lockdown phase. Okay, that should see a strong recovery and growth going forward.
Right. Thanks so much, Mahesh, for sharing with us your outlook on the market sectors as well as companies that you're looking at the current juncture. 13,652 on the index, the Sensex up about 300 points.